Once again, it's my great pleasure to have this opportunity to introduce our colleague to you here today. Then let's much short video for you, which tells us who we are and what we do to further look into our activities that our committee is devoted to. Thank you very much.
One thing I really surprised in Korea that there's a big difference between the Korean people and the people in the state. That why you invest in stocks, how to invest stocks. It's almost opposite in every area. That for example, the general investor in Korea I met. The investment horizon is very, very short. For example, I used to manage a Korea fund, by the way. I forgot to mention that under the Salespersons Club, I managed a Korea fund, which was launched about 37 plus years. I was managing the fund for 15 years. So investment horizon to me is a very, very long term. That average time horizon for my investment is about 9 years. But here, people invest in 9 days. So it's a big contrast, also the reasons for investing. For American people, they say for retirement, but Korean people say they want to make a short-term money. So I like to talk about those things that have to improve and what has to be done, something like that. So, for example, sorry, going back. Yeah, agriculture, the financial management is very underdeveloped. That, as I said before, that Korean people, the general idea of investment stock market is totally different than I learned in the US. So, for example, a Korean parent, they tell their children, don't ever buy, don't ever invest in the stock market. It's just very natural because the stock market is kind of considered here as kind of gambling, going to casinos. So it's very natural that when the average Korean parents don't ever buy stocks. And the institutional investors is no different. The Korean pension fund investment exposure in equity is very tiny. It's less than 5%. For example, in the US, it's about 50% in equities, but Korea is very small. People don't prepare for their retirement. They don't understand the capital market, so that in the capital market, the society we are living in, you have to invest your labor, but also, you have to utilize your financial asset. But, it's like in Japan, that significant portion of their financial asset is sitting on bank deposit. In Korea, about 60% in bank deposit for their retirement fund. And it's very unnatural. But people are very, very preoccupied by protecting their capital, not, return for the investment. This is I got this from the Korean newspaper that a few months ago, that Korean household wives, they about 80% of household that the wives has the responsibilities of their financial asset, and very unfortunately, this housewives don't understand in their making the capital the world. So the Korea is a ranking. It's not by me. It's a Korean paper. When the Korean paper is Korea is very, very below than their Asian peers. Slightly better than Japan though. Only 20% says that they're prepared for retirement. Parents, this is very special compared to other countries, that Korean parents, they give up their retirement for the sake of their, educating their children, especially private tutors. I was really shocked that the amount of money they're spending for their private education. 30%, 40% of their monthly salaries is being spent for private tutors, which is, I think, very, very problematic, because their parents, they're not prepared for their retirement. It's a very sad story. So I'm trying to educate Korean people that investing in their children is very terrible investment. They never pay back. So I'm trying to communicate to the Korean people that they rather invest in the stock market than spending so much money on their children. This is also very interesting graph that poverty ratio by people over 65 years old, that Korea is more than any other countries. Almost 50% of people over 65 is very poor. Compared to Japan, about 20%. And the right-hand side shows that the elderly people, they have to get support from their children, otherwise they don't have any money to survive. But 30% of the population, they need help from the children. In US, it's less than 1%, Japan only 2%. So Korea is a significant problem. When they become old, then they don't have money for their retirement. I'm showing this because in the case of the US, that because of 401k plan, that Korean average people got forced to invest in the stock market, whether they like it or not. Like my case, that I invested 10% of my salaries into equities a long time ago because they have tax benefit, and it's going to be foolish if you don't invest in the stock market at the time, and that's why the average US people they are prepared for the retirement. So there's much less fluctuation in Korea because they were able to invest in the stock market. This is shows how Korean institutions think of stock market as their people's retirement. I'm sorry. So their exposure to equities is very, very tiny. The lowest after Japan. Japan is still the lowest, but now the Japanese people, they are realizing that they cannot prepare their retirement without investing in the stock market. So Japan is pushing for more equity exposure, but Korea still they have to think about very hard that they have to change their attitude regarding the stock market. This is also very surprising to me that the workers in Korea, that preparing for retirement. But average people think that equity budget is the best way to prepare their retirement. So I'm trying to convince average workers that they have to change their allocation into more equities. This is a very interesting graph that equity exposure, retirement pensions, corporate pensions, excluding equities, Korea is very, very lowest among other countries. In the case of the US, it's over 50%, Australia over 46%, in Japan 10%, and Korea, it's very difficult to see that the portion. So Korea is very, very minimal. It's a very sad story. I mean, I'm spending most of my time doesn't, identify opportunities in equities. This is totally I can understand why they don't invest in stock market. This is one of the graphs showing that average people that after their retirement, the Koreans retire earlier than others, but they don't have money after retirement because they were able to exercise that to making the capital asset to work. Also, they spend most of their money for their children, so they have to, simply because of money, they have to work 11 more years, to make a living. This is another way of looking at why people invest in stock market. In the U.S., people say that why invest in the stock market? People say retirement. I have to prepare for my retirement, and the Koreans say that I want to make short-term money. So that's why people they think of stock market as kind of casinos for the retirement. And I don't want to bet my retirement on the casinos. It's a very strange way of thinking, and then investing in equities. So national pension service is growing very fast. So now $500 trillion. And their overseas investment has been growing very fast. So I think that I have only 15 minutes, so I have talked about the agriculture which Korean agriculture, which is totally different than rest of the countries, especially Western countries, that still some of the Asian countries think of the stock market as kind of a short-term casinos. But I think they have to change that. Korea, it's very urgent matter that the average Korean people have to prepare for their retirement. But however, having said all kind of things, my conclusion in Korean equity market, personally as an investor, I think that I view Korean equity market is very, very positive because of the agriculture. The best time for investing in stock market is always when people are very pessimistic about the stock market. So this is a great time. But the most dangerous time as an investor, so always people talk about the stock market. If a taxi driver talk about the stock market, well, I was very hesitant in some stocks. But now Korea is, I'm very optimistic about Korea because Korea corporate pensions, the equity exposure is less than 5%, which is, it's very, very exciting, making me excited that they have to invest in equities because Korean bank rate is like in other countries that the bank budget rate, interest rate is only less than 2%. You have to wait 70 years if your capital becomes twice the asset. So they have to buy Korean equities anyway. Under the law, corporate pensions cannot invest more than 40% until last year. But now they changed the rule that Korean pensions can be invested in equities up to 70%. So eventually, they'll increase to 100%. So I think the demand for equities will be increasing more and more. So I'm happy about the stock market because there are more demand for equities. And the Koreans are starting the U.S. 401k plan that they understand now that average Koreans cannot prepare for the retirement without investing in stock market. So they are creating some IRA account, which is kind of very similar to the 401k plan. And also they're trying to encourage people from defined benefit plan to defined contribution plan. And they are making more equity exposure. Also, private pension funds will be introduced to make people prepare for the retirement. So, thank you for listening to my presentation, but I'm very happy that I was able to share with you my experience in the State and Korea, and hopefully that you enjoy the rest of your program. So thank you very much.
Insightful speech to us. And now we start the third plenary session. And the moderator of this session is Kyung-joo Lee. He is Professor of Finance at Hongik University. He received a PhD from Boston, and he was the former president of Korean Academic Financial Consumer Association. Now, we welcome Professor Kyung-joo Lee.
I believe you all had a good night's sleep last night. Well, the topic we are going to talk about in this session is, as you see on the screen, insurance literacy and salesperson training. And we have three presentations by three prominent speakers. The order in your program, actually on this screen, is like this. Which I will soon change if you don't mind. And we have two discussants here. You see my name also on this list, but because I'm moderating this session, I would rather make some comments before presentation. And yeah, if you don't mind, too. This issue of insurance literacy and salesperson training, I believe arises mainly because there is significant information asymmetry in insurance markets between providers and consumers. And the type of information asymmetry here in this case is that the providers know much more about themselves and the products they sell. And the reasons are diverse, I think. Insurance products may be too complicated for average consumers to understand up to a level where they can make right choices, or providers and salespersons may not be willing or able to give necessary information for for consumers to make right choices, or consumers may not try hard enough to understand what they buy with their own money. So one practical way of remedying this problem has been to impose licensing standards for insurance agents on the purpose of enhancing their quality. In that context, two papers. Second one, and the third one, actually are mainly about the institutional features of licensing regulations imposed on insurance agents in Taiwan and Japan, respectively. And the first one, well, the title is Tentative Innovation in Insurance Literacy Development. Actually, it had been a mystery until last night when I talked to Professor Tennyson what she's planning to say under this title. Actually, I got two papers from her, and one of them is looking at, he's looked into whether it has been successful. The licensing standard has been successful to enhance the quality of insurance agents. So the study by Professor Tennyson seems kind of general study, and the other two, second one and the third one in this on the screen, seems to be the case studies. So I do a change order of presentation, putting the first presentation here in the last place. So the first speaker would be Professor Chen from Taiwan. So okay, that's all I can say. Why don't you welcome Professor Chen? Big applause.
System in Taiwan, because life insurance grows so much in Taiwan and in recently. So I would like to say how can they do this and the contribution of the salesperson. So my presentation will roughly go into this kind of sequence. I have given an overview of our insurance market in Taiwan, and then about how to be a salesperson, insurance salesperson, and training and continuing education, and then performance of the salesperson of life insurance. And also I give a showcase about the KT Life Insurance Company, how they do the training, and finally a concluding remark. And right now we have about 20 29 life insurance company and 22 non-life insurance company, and agents about 300, and brokers about 480, so almost 50. In fact, the agents, traditional agents and brokers not really work so much, but most of the broker and agents come from bank assurance, because the bank, if they want to sell insurance, they need to form an agent or broker firm. So the number of agents and brokers increased very much. And the salesperson, all the insurance solicitors are around 335,000. We will see that for the insurance premium, right now Taiwan rank about 11 for the premium income, and for life insurance much better, is about number 9, and non-life is 18. But if compared to the other countries in penetration and also the density, we will be much better. And because we are a small country, and so if we say the premium income, definitely we cannot compare with US or Japan. But if we're talking about penetration, we are all we have been number 1 for many years, since 2007 is continuing. So right now it's almost going to 19%, because it's 18.9, so almost 19%. So people spend a lot of money in life insurance, because the penetration is premium compared to GDP, so it's right now it's almost 19%, so we can see how much they grow. And you can see the insurance premium growth rate is much higher, much faster than the economic growth. So that's the reason why the proportion insurance premium to GDP can continue to grow, because the premium grows faster than economic growth, and especially life insurance, because people put the money in insurance company much more than in bank. So that's the reason why it goes. And for the image, a couple of years ago, when I do a questionnaire, a survey to the college students about their opinion on insurance and bank. So the question for them is to compare with bank, and then how you think about insurance company. Do you feel the insurance company better than bank, or the insurance product, or insurance salesperson? For this kind of comparison, and the average number I think about around 4.5, something like that. So that means they give the better evaluation on insurance company compared to bank. In most of countries, usually we feel bank is better than insurance company, because traditional people feel bank is larger and better and more professional. And insurance solicitor usually give people bad feelings. That's just to ask people to buy insurance and persuade them and pursue them to put the money into insurance company. But when people want to ask to claim the benefit, insurance company may be there. So in the past, people usually have a poor image, a poor impression about insurance company. But in Taiwan, I think in these 10 years, people completely changed their image about insurance company, because insurance company very aggressive, and they have done more advertisement on the media, and also they have done many social contributions to the society. So now people become very familiar with insurance product and insurance company. So their image, I think, will not be worse than bank anymore. So that's contribution about insurance salesperson. And then I will talk about our insurance sales solicitation system. And right now, according to our regulation, each salesperson can only work for one company, so they must exclusively for one insurance company or for agent or broker. They cannot sell the insurance product for different companies. And that's very important, the requirement. The second one, once they register, the solicitor should attend the annual training program provided by their employee company. Okay, so they need to continue to accept this kind of training. And the employee company can revoke the solicitor's registration because those kind of registration were controlled by the company. So they need to attend the training. If they don't attend the training, the company may further. So you can see the process is like this. If a person wants to be an insurance salesperson, they need to be recruited by insurance company or agent and broker first. And then go to Children and then take the exam, pass the exam, and then do the registration. And after this, they can start to sell the insurance product. And after passing them, they still need to take continue training program in the company. And this kind of every certificate for sales is extended for 5 years, so you need to renew every 5 years. So when you want to renew, your company must give approve or something, say, okay, you really attend this training program, so we allow you to renew your sales certificate or something. So the process is this way. And to be a salesperson, right now we have some basic requirements for your qualification. It's at least age 20, and then your education level should be higher than high school. Before 2011, the salesperson only required a junior high graduate, but right now we give up the education level for the salesperson. They need to have a high school education, and then they can register for insurance sales. The other are quite easy, the citizen or permanent resident. And the Article 7 just some kind of regulation that you don't have some kind of misbehavior in the life or some kind of criminal. So the education required education background is lived right now to high school, so usually they have a better understanding of the insurance process. And so when you want to apply for taking an exam, usually the insurance company do the application for you. You cannot go to apply exam by yourself. So that's the reason we say you must be hired by a company first, and then the company go to the registration, go to apply the exam for you. And also if you are an employee in the broker or agency, then the broker agent trade association will apply the exam for you. So the individual cannot go to do the application, but so that the company or the agent, they can control whether you continue to attend the training program. And for the examination, I think totally they need to take 3 courses, 2 for the professional knowledge, like insurance practice and insurance regulation, and the other one is some kind of general knowledge about financial market and the business asset for financial products. So they need to take these 3. Usually the exam is not too difficult, and when we require the score, each course is for 100, so we require at least each one you need to get 60. But total together, 2 professional courses, you need to have 140. And for the general knowledge, at least you need to have 70. Your score must be 70. So the pass rate about the exam is about 50%. And for those people that pass the exam, they will continue to do the sales. They need to do registration. So some of them, even they pass the exam, they did not go to do registration, like some part-time or some kind of work. Although they take exam and pass it, but they finally did not register. So registration is only about 30%. So those salesperson, the registered salesperson, I think they have some general knowledge about this. So you can see the index. Okay, so the people, if we treat an applicant about 100 and then 87, so about 90% go to take exam, and among them 50% pass the exam and finally register is about 33. And for this kind of system, we start from 1993. So that's the reason I say we continue to improve the image about that insurance, because before 1990s, usually many housewives or part-time workers, they can sell insurance. So your insurance company give people a bad feeling or bad image, or they just solicitate some kind of insurance policy, but they don't understand the insurance product at all, and they just use their, for example, friendship, or because they are family member or close relatives or something, and not very professional. But from 1990, after we opened the market to international investors, and the insurance market become more professional, and so the salesperson, they need to have some kind of professional knowledge, not just sell insurance product by human relationship. So this kind of system started from 1993, and right now the total number of registered sales, I said, is around 335,000, and among them, about 60% belong to insurance company. They are insurance companies' employee, and 40% are employee for agent and brokers. So you can see the solicitor about 1/3 male and 2/3 female, and most of them, I think 60% of the salesmen, their age is under 45, so now it's younger, so just more profession. Some people treat the insurance sales as a full-time profession, and they want to go into this kind of job, and not just part-time or the housewife selling or something like that. And most of them, I say, the education is higher, is greater than high school. It's about 97, that's the requirement. And some of them, because they are the very old sales person, so at that time they can get a license for the education under high school. So we have 3% of people, but most of the salesperson now have education higher than high school, and higher than college is around 45, so almost 30%. Now the college student can accept this kind of feeling, go to the insurance sales. But in my generation, when I studied college, usually our parents don't like us to go to be an insurance salesperson. They feel that's not a respected profession. So they will feel, oh, you are a college student, then why are you going to be an insurance sales? So in my generation, people don't respect insurance sales. But right now, people consider insurance sales one kind of profession, just like accountant or any other professional job. They treat they as a financial professional. So now many college students, they will go into this kind of job. So that's some kind of distribution. You can see the age distribution and also the gender distribution. And here is the full-time full-time or part-time. Now about half, 51% is part-time and 48 or 49% is full-time for the working time for the salesperson. And the education distribution, we already showed the college student already almost going to 50, and now some graduate students at MBA, they also go to this kind of profession. So I think the insurance sale already established their image in the society. People just think this is a profession, just a fair low status or something. So, and if we see the newly registered salesperson, you will see even more college students and graduate students will go to be insurance sales. So their education, their knowledge or intelligence continue to grow. So that's much higher than before. And very good. It's just paper. Okay, and how many people will continue to stay to be a salesperson? I think around 50%. For those newly registered, for example, every year around 25,000 new registered sales. And this statistic is about whether they can stay for one more year. So that's if they can stay for 13 months, and how many? So about 46% of the registered salesperson will continue to stay in these professions. About half of it. Then we can go to the training system. Right now, the requirement is like this way. For the first year, you need to attend 30 hours training. 30 hours training, and there is 9 required courses. And from second year to the end of 5 years, and you need to take about 12 hours more every year for another 12 course training. So that's the government requirement, and that's the minimum. If you want to have a certificate for sales agent, that's the minimum you need to do. And so it's first year have 9 required courses. And you can see they almost cover the basic idea about insurance and financial planning. But don't worry about this. It looks very much like we already have compiled one book. And so there's some chapter, every chapter covers one topic. So they can read a book and go take the exam. And so this required course. And from second year to 5th year, every year they take 12 hours. And among these 4 years, they will cover those 12 courses like insurance law and regulation or risk management, or sometimes they also learn some computer and media and skill in order to sell insurance, and also about investment and some other new product knowledge. And if you want to sell variable life insurance, then you need to take even more class, some kind of training on this. You need to have extra hours. And if you have if more complicated product, variable life insurance with structured product, then you need additional training. So you will see that depending on the product you sell, and you need more training. And so for the first year, and then after the 6th year, depending on which insurance company you belong to, they can give you extra training. Okay? And every year, the insurance company must submit their training program to the government, to the regulator, to see for what kind of training program they provide. They send to the Insurance Trade Association to get a review and approval of the program. And also, the insurance company, they must, the employer, they are responsible to report the completion for the solicitors. Every year they need to do this, so there are many requirements. And in the association or the regulator, they have the right to go into your company to investigate your training program, whether you follow what you submitted program, whether you're seriously doing it. So they will come to make evaluation and investigate your program. And so that's their training. And usually the salesperson, when they stay, if they continue to stay in the company, usually they will satisfy this kind of requirement. And so almost 97% of the salesperson, they will finish this kind of training for every year. You will see a second. So the completion rate is very high. And for the performance, you can see for those people, we can say they're contributing about 236,000 per salesperson compared to the premium and to the employees. And the people being violated and punished, I think not many for the around in the past is about 1,800 salesperson. They may be suspended their license for 3 months to 1 year. Most of them, and the revoke registration only about 300 person. That just a small among the salesperson. So most of the salesperson, they will keep, they will obey the rule and follow the requirements. The revoke registration of 0.09%, so that's very low. And the primary reason for them to be revoked registration is they fear of the insurance policy without the consent of the insurer. So that's a major reason. So among this 150% being revoked the license, the major reason, half is the signed contract for the insurer, and half of about 40 people is due to the impairment of the insurance premium. Okay, and you can see the complaint ratio. The consumer, the policy owner, the complaint about insurance, the complaint ratio is very low. Per 1,000 premium, per 1,000 policy, the complaint ratio is only about 0.015. Is for non-life and for life insurance, 0.012. So per 1,000 policy, complaint ratio is 1,000 point. So that's very, very low. So you can see so many policies, but only a few of them being complained and submit the complaint to it. And this case study, a showcase about our life insurance company. KP Life is the largest one in Taiwan, and this company has about 20% of market share in life insurance industry. And they have a very solid salesperson training program. They even have a small school. We can say they have a building and a small campus outside Taipei City, and all the employees, when they are hired, they will go to here and they give their internal training. So in addition to the minimum requirement of 30 hours and 12 hours and required by the regulator, in fact, they give a lot of training to their employees, and they need to stay there for 1 month. They have dormitory and people live there. So they have about 26,000 salesperson, and their training expense is spent about 27 million per year for the training. And their training time is more than 60 hours, 65 inside the classroom, and also outside the classroom. They have many field office programs, and their retention ratio is about 40. That's also the advanced training for and continuing education. So in their company, they have like a school and then different branch. And so for this kind of training, you will see for life insurance knowledge, they give 61 hours, and for finance knowledge, give 76, and also management knowledge for 200 hours, and also some kind of computer and technical. So in fact, they give a lot of training to their employees. So that's the reason why right now people think about insurance sales as a profession, not just a solicitor only. So, and also they inside their company, they have their own broadcast system, or TV program. So every 30 minutes, they will, in the morning, they will show the business news to their employees, to let them understand what happened in the society and what relevant financial news related to insurance, and also the TV program in the morning. And so if the sales, they can continue to watch those kind of programs to get more knowledge on this. And also they have some online program that you can go to study by your own. So their pay rate is about 96, so the highest among the life insurance in Taiwan. And finally, I will make some kind of empirical analysis about insurance sales. When I say bank insurance, that means they only sell, but the bank did not give a following training. And the salesperson in our insurance company, they have more training. And you can see the difference. For those salespeople with more training, the company, the recommend score is much higher, and also their maintenance, the contract maintenance for 13 months will be higher. So that's some kind of correlation, the empirical study. So the training really give insurance company much better reward and also consumer response. So that's my presentation of Taiwan. Thank you.
Thank you. Actually, I forgot to introduce the speakers and discuss. Professor Chen, graduated from, got her PhD from the World School. Her major is risk and insurance, and she is now teaching at NCCU Taiwan. I'm sorry. Actually, we are supposed to be done by 11, and we have about 40 minutes to go. So, next speakers, please try to be done in 20 minutes. Okay. Next speaker is Professor Mariko Nakabayashi from Meiji University. She is professor in School of Commerce. Please welcome.
Good morning, everyone. I'm very happy to be here. I'm deeply thankful for this opportunity to be able to talk to you all today. This is Mariko Nakabayashi, professor at the School of Commerce, Meiji University, Tokyo, Japan. My presentation title is Education for the Life Insurance Sales Professional in the Super-Aged Japanese Society. I mainly focus on changes in environment of life insurance sales professionals, that is, how the Japanese Super-Aged Society affected the practices of the life health insurance salesperson. And how should the title agent cope with this elderly society? What is the proper education for a title agent in supervised society? This is one of the most important ethical issues in Japanese life insurance industry. So, as Johnny indicated, Japanese society, poor elderly and not preparing for retirement is a very serious issue. And Japan is pushing for the investing retirement money, but even pushing retirement, pushing prepare for retirement, the Japanese age society is the speed of Japanese age society is very rapid, so we have to do more things to prepare for that. This is the agenda of my presentation. Okay. First, I'd like to talk about the purpose of my presentation. And the average age of the policyholder in the supervised Japanese society is increasing. And the needs of the elderly to cope with longevity risks have diversified. To secure protection through life insurance, elderly policyholders need to be cautious about their policy throughout their life. To address this, life insurance sales professionals are required to conduct various further procedures. In this process, some ethical issues are pointed out. In this presentation, I would like to clarify the issues concerning such services at both stages, that is, the policy payment management stage and policy payment management stage. Okay. The sales or new conduct stage. The Life Insurance Association of Japan and its member countries are required to fulfill their legal as well as ethical responsibility to ensure these issues are addressed. A system that improves the quality of service for the elderly and enhance their convenience is necessary. In this presentation, I mainly focus on the introduction of changes in environment of life insurance sales professionals. I shortly introduce the education system itself. In addition, there is a difference in practice of life insurance and non-life insurance professionals. So today, I only focus on life insurance industry. Okay, move to the next session. At first, I introduce the Japanese supervised society itself. Next is the right. This is the profile of aging society in Japan now. Total population is 10th in the world, but the Japanese population remained roughly unchanged recently and has entered into decreasing since 2008. Declining birth rate is one of the most serious issues in Japan, and it's also a very important issue in aging. And aging, as for aging, percentage of population of over 60 is 25.9%, and average life expectancy is males is over 80. In case of females, 86.83. Median age is 46 years old. And one in 8 is over 75 years old. It's now, but in case of by 2060, 1 in 2.5 will be over 65, and 1 in 4 will be over 75, and the average life expectancy is over 80. In case of humans, over 90. Let's see the distribution in chart. This is issued by the Japanese government, the estimate of Japanese aging society. Now we are in here, and the population is decreasing, but the percentage of aging is increasing. And this is the average life expectancy trend and future projection. And this is a worldwide aging ratio, and the speed of aging in Japan is so rapid. And this red line is Japan. And this is the demographic pyramid of Japan as of 1950s. And this is now, and it may be to 2050. Now I focus on elderly household. Those head of household is over 65 is here, and the most important thing is single person household is increasing very rapidly. In addition, the number of elderly, in addition to the number of elderly itself, and their healthy program is also very important, especially dementia. The number of dementia is also increasing. And next, I'd like to introduce the Japanese insurance business shortly. And as you know, Japan is the second largest life insurance market in the world, and market share is very unique. Four major domestic insurers occupy more than 60% of policies in both individual insurance. It's a figure of as of 2011, but the situation is not changed. And the main distribution channel is a type agent. And according to the survey conducted recently, 59.4% is sold by tied sales agent. And the last part is very important, increasing in lifetime beneficiary policies. Consumers' needs have rapidly changed from traditional product to lifetime benefit policies. For example, nursing care, medical insurance, individual annuities. This is the percentage of distribution of individual insurance by type. This is the number of new policy and number of policy in force in 2013. And this is also a figure of number of life insurance company and agency. The number of companies is not so much, and the number is not changed recently, and the number of type agent is decreasing. And this is the trend of the agency. as Association of Japan, it's an answer or anket for member countries, member companies. Due to a sharp increase of elderly population in Japan, so this figure shows very serious issues. Percentage of existing, ratio of existing policies, percentage of age is changing, and now most policyholders are over 60. And the projection number of individual annuity contract reaching maturity is also shown. Okay. In this section, I'd like to introduce a system of Japanese education for life insurance salespersons. Under laws and regulations, head sales agent and sales representatives at agency need to be registered with the Financial Service Agency Japan to sell insurance products as life insurance research. And the Life Insurance Association of Japan administrative examination to enhance the ability of research to provide better service to consumers. And in addition to normal product, variable life insurance sales qualification course examination are added. And LIAJ reviews and enhance the content of textbook for those examinations every year. And this is a chart of common to industry educational system. At the first stage, initial 3 months training period, and they pass examination. Then a training for professional course examination. After that, some of the salesperson pass variable life sales qualification examination. Then they can register it as a member of LIAJ's agency. And as for each courses, I summarize our purpose and description. And the association has a system for continuous education for all life insurance sales professionals and once a year in principle. This association used to introduce education only for new employer in the past, but now they introduce this system once a year. And LIAJ also conduct follow-up activity every year to enhance the continuous education system. Okay. The last part, ethical issue in life insurance in super aged to Japanese society is very important. So I introduced a feature of Japanese aged to society until now. So in this section, let's consider what kind of ethical issue in education for sales professionals in Japanese industry to cope with. And this is the characteristics of elderly policy holders. Why the life insurance sales professionals should pay special attention to elderlies in the first place. To be aging, there are some special features. For example, changing physical and mental health, and changing family situation Japanese Life Insurance Association hold an interactive dialogue on life insurance in cooperation with consumer organizations across the country to collect consumers' opinion and promote a proper understanding of life insurance business. And their answers are categorized in this 7 points. And catering issues in elderly policy folder to secure the protection through life insurance. Elderly policy holder need to be cautious about the policy throughout their life. Issues in elderly policy folder are categorized as following. Issue in policy payment management stage and issue in the sales of new contract stage. And there may be many ways to provide ideal insurance service. Among them, ideal way information sharing on good practice tailored to elderly is very important. It's according to Japanese society's opinion. And this is the figure of challenge before beginning procedures and during procedures and factors. In this slide, I'd like to talk about how to prevent procedural risk. This is a figure to show issue to prevent how the issue happened and to prevent during the policy period. In general, only the policy holder familiar with policy provision. Hence, it's necessary to inform family member with the content of policy holder or insurance provision and how to make insurance claim. So, currently, life insurance company collect contact address of only policy holders, but they should improve address management, including registering multiple addresses. And also life insurance companies are registered to third-party claim scheme, which enables agent to make a claim on behalf of insured. And if the insured cannot do so, this does not apply to all policies, and the scope of scheme is limited. Then, continued effort are needed to improve the financial literacy, including insurance for elderly. As for information sharing aspect, there are some examples. I show 2 examples in this. This is a kind of scandal, a non-payment of proper claims. It happened in around 2005 to 6. It's a very serious problem, but after this incident, the industry's effort to prevent the recurrence of this problem is a very good example to information sharing. And it also a good example I'd like to point out is attitude after the Great East Japan earthquake 2011. Life insurance industry's response is very quick and very proper. Okay. I move on the concluding remarks. the activity of life insurance industry and member companies. And even the activities are good, it's critical to train their sales professionals to deliver their service properly. Importance of education for life insurance sales professional is professional. And concluding for better service for elderly. And legal responsibility, to compare legal responsibility, ethical responsibility is very important to cope with this issue. And in addition to education for life insurance sales professionals, education for all ages to encourage insurance literacy is also very important. That was my presentation. Thank you for listening.
Okay, thank you. Thanks for a nice presentation and lots of useful facts about Japanese insurance industry. The next speaker, the third speaker, originally the first speaker is Professor Sharon Tennyson from Cornell University, US. Actually, she had been a professor at Wharton School, right? So, at the time, I was a student. I didn't know at the time. Well, I came here the fact last night. Okay, please welcome her with big applause.
Good morning. Is this working? Yes? Well, it's my pleasure to be here this morning, and I hope that I will be able to provide you with some useful information, or at least an interesting narrative. As Professor Lee mentioned, there are two papers that I've included in the packet rather than a single paper or a presentation. What I'm intending to do this morning is to not go into either of those papers in detail, but to draw some information from various research that I have done in the last 5 or 6 years or so, to try to put some of this information in the context of consumer financial literacy, insurance regulation, in particular regulatory approaches that are designed with concerns about consumers' financial literacy in mind. So as has been mentioned several times throughout this conference and again this morning, there is some evidence and significant public policy concern that consumers' insurance literacy is lacking. There's not a huge amount of direct research on this, but some research from the US suggests a few conclusions such as are listed here on the slide. Many consumers admit that they don't understand insurance disclosures and that they don't read them. A survey undertaken by the National Association of Insurance Commissioners in the US found a similar result, that consumers readily admitted that they don't have good understanding of their insurance policies. And a variety of survey and focus group evidence suggests that people share this lack of knowledge with other people, right? Nonetheless, we all admit we don't understand our insurance policies very well, but yet the main source of obtaining information about insurance is word of mouth from our friends and family. Some focus groups that I did with a colleague at Cornell highlight some of the common misperceptions that consumers have about insurance. And this was a set of focus group participants who were both interested in insurance, they agreed to participate in studies about insurance information, and also had substantial experience with insurance. Some of the misconceptions that were demonstrated in the discussions in the focus group are going to be familiar to anyone who knows about consumers' views about insurance. Consumers find insurance attractive, even if it's for very limited types of risks, if the premium is low. so they'll buy it with some notion that it's a good deal. Consumers commonly have this notion that buying insurance over time, those premiums should somehow add up to cover the cost of accidents, which is certainly not the case for something like automobile insurance. Consumers often view insurance as an investment, that it should pay off by resulting in a claim that is compensated by the insurance company, which of course is the worst possible outcome for an insurance consumer, at least in the property casualty realm, which we were discussing there. And there's generally a lack of recognition that insurance needs might change over time. Insurance needs of different types of families and consumers will be different. So this word-of-mouth system may continue some of these misperceptions if the main source of information that consumers have about insurance are their friends and family. There have been a couple of recent surveys that have more specifically tried to assess consumers' insurance literacy. And again, these were adult samples. One survey was undertaken by the NAIC in 2010. The other survey is reported in a paper that I included my reference list here in 2011. As we see for financial literacy in general, scores on these types of assessments for insurance are also generally pretty low. Majority of consumers are not well informed enough to answer these types of knowledge assessments and get many scores right. The mean scores on both of these assessments were right around 60%. The other interesting finding here, and this I think relates to potential value of insurance agents, is that what we discovered in analyzing both of these survey results is that the average consumer is better able to answer questions about general insurance terminology or general principles of insurance than they are able to answer or understand correctly terms and conditions of specific insurance policies. So the surveys, the knowledge assessments here, had both of those types of questions, right? General conceptual questions about what is insurance for, what is a life insurance policy for, that sort of thing, but also then questions about deductibles and limits and so forth. No-fault auto insurance. And these were the details that consumers had a much harder time answering than general questions about insurance as a concept. In relation to knowledge sources, and this data is reported in the 2011 paper, what this graph is showing in the line is the score on the assessment, and what's shown in the bar are the number of respondents in each of these categories. And so on the bottom here we have the consumer's preferred choice for insurance information. So they're asked a question, if you were seeking information about insurance, what's the first place you would look? So the options here are the print media, the internet, an insurance industry representative, this includes an insurance company or an agent, an expert outside the insurance industry, for example, a financial planner, or informal sources, that's word of mouth, family, friends, neighbors, that sort of thing. And what we see here is a couple of patterns that I think are interesting. First of all, we do see that people are sharing their lack of knowledge with others. Those whose first choice for insurance information was word of mouth or family and friends scored the worst as a group on average on this insurance assessment. The second thing that's interesting and perhaps disturbing in the context of the insurance agency or the insurance industry is that those who scored the best as a group are those who sought advice from an expert external to the insurance industry, a financial planner, for example, rather than those who sought information from an insurance agent or an insurance company. That group, on average, scored the second worst doing better as a group only than those who seek information from friends and family. So that's something interesting, but also perhaps disturbing when we think about information provision by insurance companies and agents. This slide here, again, has at the bottom these preferred sources of information: print, internet, industry, expert, or informal sources. But divides consumers who choose each of those information sources as their preferred choice by their relative confidence in their knowledge of insurance. And so we have a Likert scale that we are putting out here only the extremes of, leaving out those who feel sort of somewhat confident or somewhat unconfident. And so we're dividing each group into those who express that they're not confident in their insurance knowledge and those who express that they are confident in their insurance knowledge. And the thing that I want to point out here is interesting, especially in the context of the previous slide, is the confidence score for those whose preferred source of information is an insurance industry representative, the insurance company or the insurance agent. And we may see some evidence of overconfidence here, given that on the previous slide we saw that this group did not do particularly well in the assessment of insurance knowledge, and yet they're very confident in the knowledge that they believe they have. So again, I think this also raises some questions about the role of industry representatives and agents in providing information to insurance consumers. To deal with concerns about the quality of information and the extent of consumers' insurance literacy, a variety of regulations are oftentimes imposed in markets. In fact, many regulations in insurance markets are dealing with the potential, or are trying to address the potential of lack of information or lack of knowledge or insurance literacy on the part of consumers. Product regulations are not uncommon, and I'm including here direct regulation of content and form, policy restrictions put in place by a regulator, because this is one way to get around the problem of lack of information of consumers or lack of insurance literacy. If we restrict the product space, consumers have to know less. There's less information that they have to sort through. There are less choices. There are less complications. This is one way to deal with an information problem. Disclosure requirements are another common way to deal with an information problem. Unfortunately, we see in the survey evidence that consumers, on average, don't understand those disclosures and don't seem to bother with them too much. When we see regulations on agents, licensing requirements, education requirements, ethical requirements, these are also regulations aimed at dealing with this information problem. Here we're regulating the providers of information in the hopes that the information they pass on to consumers is going to be unbiased, reliable, helpful information. And there are a variety of different types of regulations that are put in place in various markets to try to assure that agents provide high-quality information to insurance consumers. I'm going to talk about one example, and mainly I'm going to talk about this because I think it's an interesting example, and it has some kind of unusual outcomes, unusual features and unusual outcomes, and that's the topic of the two papers that I actually included in the packet, which is about insurance regulation in Germany. I'm putting here the information about the European Union because that's a source of a lot of regulatory change in insurance markets in the EU. That was not the purpose of the changes that were put into place in the EU with respect to insurance markets. The purpose was to harmonize the markets. The purpose was to open up markets for insurance to all agents and all companies across the EU so that there could be an EU-wide market. But in order to do that, regulations need to be similar or hopefully uniform across that entire market. And insurance markets in the EU countries, as in many other countries, prior to this integration were highly regulated and regulated in fairly idiosyncratic ways, as is also the case in many other markets. So two regulations that are important, two changes in regulations that are important for the EU and specifically for the case of Germany in this context is first the elimination of rate regulation and prior approval of product regulations. This was done to level the playing field, to make sure that markets are open to new providers and that competition is possible. And this was established in the third generation insurance directive of 1994. A more recent regulatory change, which was imposed in the 2002 directive on insurance mediation or insurance intermediation, as we would say in the US, imposed uniform agent licensing requirements across the EU. So the first example here is trying to open up this market for all companies, and the second is trying to open up the market more effectively for all companies by making sure that agents of a particular company operating anywhere in the EU will be qualified to sell in any market that's a part of the EU. These had big consequences for the German insurance market because rate and product regulation was very prevalent prior to the EU change, and there were no licensing requirements for agents in Germany. So prior to the EU, the German insurance market was highly standardized. Prior approval of all consumer-oriented insurance products, reduced competition. The easiest thing to do in the face of a stringent product regulation system is to simply offer the standard or sample product, and this is what the market looked like. Now, the benefit of that to consumers is it's a pretty transparent market. I choose from these insurance companies. They're all offering essentially the same product. The products are simplified because of these product regulation standards, and so the market is pretty transparent. There were no professional requirements for agents and brokers. There were a large number of agents in the market, including part-time agents and casual agents, and information quality provided by agents was low. Having said that, that was not necessarily a problem, right? Because the intermediation function maybe wasn't so important, given that the product market was highly standardized. And so deregulating the product market changes the whole system here. Increases the need for consumers to have good information, increases the need for insurance literacy among consumers, but at least in the case of Germany, it wasn't clear that there was a professional intermediation service being provided in the insurance industry. After the 2002 requirements of the EU for agent licensing, these licensing requirements were introduced in Germany. There are entry requirements now. There is a licensing test. Agents are entered into the trade registry, which is a way then to monitor who's an agent, who has passed the test, the behavior of agents. Agents must obtain professional liability insurance, so they're held to a fiduciary standard. They must have a good reputation, no criminal convictions in the past 5 years, which seems a kind of a low bar to me, but I'm not quite sure what crimes they're discussing here. And must also not be financially distressed. So no insolvency proceedings going on, or you lose your license. There are also behavioral standards. There are requirements to provide information to consumers. First about their license, about their relationship with companies, about consumers' rights. There is specifically a fiduciary requirement to take into account the customer's desires and needs when making advice. Advice must be given regarding specific products, so there's now a requirement to provide advice. And when making recommendations, comparisons have to be made. So you can't simply recommend a product. Even exclusive agents, agents that work for a single company, have to provide product comparisons to customers in this sales interaction. And then the entire process has to be documented, and so there is a record of the interaction and the information and the comparisons provided to the consumer. So this is a huge change in the intermediation role in this market. What were the results of this? Well, first of all, the number of agents in the market decreased dramatically in a pretty short period of time. Many of these agents who left the market were part-time agents or casual agents who didn't want to face the test, didn't want to have to buy the professional liability insurance. They're not selling a lot of insurance anyway, so those entry standards are not worth it to them. In the paper that I include in the packet, we have data from one insurer in Germany, and we see here the impact of agents at this company. So the total number of agents fell by more than half at this company between 2004 and 2010. And this company engages with both independent agents and exclusive agents. And the number of exclusive agents fell by, I think, about 2/3 here. So we have a huge exodus of agents from the market. And the question is, does that improve agent quality? And that's the topic of lots of data in the second paper. But the bottom line is that preliminary evidence suggests that it probably did. There are two ways you could think about these types of requirements increasing agent quality. One is simply low-quality agents exit the market. Here I'm calling that a sorting effect. And the other is an incentive effect. We're putting behavioral requirements on agents. They're having to invest in order to become an agent. They now have greater incentives to do a good job, both because they've made this investment, also because of specific regulations that they face. In Germany, as in many countries in the EU, insurance policies run continuously unless actively canceled by the consumer. And that's what I'm calling an early cancellation rate. After maybe only 1 year, instead of keeping with the same insurance company, deciding to cancel and move the policy elsewhere. And that's one measure that we're using here for agent advice quality. If the agent has made a poor match for the consumer or given poor advice about the policy, that consumer should be more likely to make an early cancellation. And so we see some evidence of increases in quality. When we look in the period before the regulations about licensing were in place, those agents who left the market had higher early cancellation rates than those agents who remained in the market. And then when we look in the post-regulation period, those agents who remained in the market, and we compare their post-regulation cancellation rates to their pre-regulation cancellation rates, we see that they do better in terms of maintaining customers in their portfolio after the regulations are in place, which is perhaps some evidence of a positive incentive effect. So it does seem that the licensing, despite decreasing the number of agents, may have had some positive effect on agent quality and agent advice quality. The other feature of the German insurance market that has changed a lot as the result of these changes in regulation is there are a lot more products widely available because of the elimination of the product form regulation. And this was a cause of great concern because German customers were used to very standardized products and not very helpful advice. And this worked for them. The market was transparent. Now we're throwing open the gates here to lots and lots of new policies, new policy forms, And then this concern about what do we do about consumers who don't have a lot of insurance literacy shopping in this market. The second paper that I've included in the packet is documenting something that just makes the heart of an economist swell with pride, which is the rise of an independent market in response to this need for information. Economists would predict always that if we have this sort of need for information in the market, there should be some way that the market will respond and provide this information. It doesn't always work that way. This is one case in which this appears to have happened. In response to the product form deregulation, private insurance product quality ratings have sprung up in the insurance market in Germany and are a very important source of information and a very trusted source of information for consumers and brokers, and indeed even insurance companies say that they trust these ratings. Why does this market work is the topic of the second paper that I've included in the packet. And I'll just say a few words about that in terms of talking about the governance of the market. The most important private agencies are Morgan & Morgan and Frank and Bornberg. These are rating agencies that grew out of insurance brokerage firms. So they sprung up when there was this need for information, and they already had good information, and so they started to package and sell that information. Their ratings are largely targeted to insurance agents and brokers, and now think again about this new regulatory environment where comparisons are required and documentation of the interaction is required and so forth, right? So this is something that's going to be useful and demanded by agents and brokers. And so it's not simply providing to those agents and brokers a number, but they're also providing databases and software products to help them analyze and compare the products going behind just the ratings number. Another interesting feature about the ratings market in Germany is this third column here, which is headed up with the heading Finance Test. There is also a government insurance product quality rater, and that agency has been in the market for quite a long time. It doesn't provide as much coverage in terms of numbers of products as the private agencies, but it does have a long record of providing quality ratings for consumers' use in the various insurance markets in Germany. This is just a chart that shows you the top line rating of each of these agencies. M&M uses a star system. Frank and Bornberg uses something that's looks more like sort of bond ratings, and Finance Test provides numerical scores. But we can collapse these into common scores because the language that they use to describe what the stars and the Fs and the numbers mean are relatively similar across the three agencies. So the question is, can these ratings protect consumers? We now don't protect them by constricting the product space. There's a very complicated product space with these product ratings out there to help them. And what we emphasize in the paper that we write is that the governance structure of this quality ratings market is actually very good in terms of the likelihood of supporting unbiased and high quality ratings. So ratings markets after the financial crisis have taken at least one black eye, if not two black eyes, in terms of confidence that they're going to work in any reliable fashion. But what we point out here is that the governance structure is what determines that, right? The credit ratings market fell apart because it had very poor governance structures to support high quality and unbiased ratings. This market is very different. First, the rating agencies choose the products that they rate, and they generally try to rate all the products, and so there are multiple ratings of each product rather than simply one agency's rating. The insurer is not paying to generate the rating. The insurer may pay for a stamp of approval or something after it's done, but they're not involved in the process or the choice of the rating. And as I said before, the main customers for the ratings are agents and brokers who have a duty to provide comparative information to consumers, right? And also, given the way that they sprung up, the main consulting clients of the rating agencies are the agents and brokers and not the insurance companies. So you don't have this pressure directly from insurance companies to bias ratings upwards for their purposes, okay? And coupled with the intermediary regulations which push agents to provide information and comparisons to consumers, these things together should help to assure that the ratings market works reasonably well. And this is a partial snapshot of a paper that's, table that's included in the paper, and it's pretty detailed here, and I won't go over those details. What the purpose of it is that we're trying to compare the government ratings to the private ratings when we have them rating the same product. Because the government should not have an incentive to bias the ratings in the same way that a private rating agency might. And so we're using the government rating as a benchmark and comparing Morgan & Morgan's ratings of the same products to the government's ratings, and the same for Frank and Bornberg. And the punchline here is that their ratings are, a majority of their ratings are equal if we put them into a common scale, but also that there's deviations in both ways, right? So we don't see elevated ratings from the private rating agencies relative to what the government would rate, which is one suggested piece of evidence that this ratings market provides reasonable information for insurance consumers. The punchline that I take away from these combination of things, the changes in the regulations of the agents and the opening up of the market, but the rise of this private market for information, are that there are circumstances, and in this case we just see some happy circumstances. There are circumstances in which private market mechanisms can step in to fill a void that's created by a change in regulation. So we should think about that as a possibility for enhancing choice of consumers while still maintaining good choices of consumers through ratings. However, I do want to caution, this is a very specific circumstance because a key thing I think that's driving this ratings market working well is that the main audience is the agent-broker sector, not the consumer sector. And the audience of agents and brokers is driven by regulations that the agents and brokers face to provide comparative and unbiased information. We haven't addressed this a whole lot, but also the existence of the government rating agency may also help to support that market. There is a kind of an independent check which may serve to keep private ratings in line as well. This is just some of the papers that I've referenced in talking about survey data and the various charts that are there. Thank you very much.
Thank you for this presentation, quite comprehensive presentation.
Japan is entering into aging society, but I'm shocked by the figures and the facts in the presentation. As some kinds of financial consumer, super-aged start to play more important role than before in aging society. And I think it's the most remarkable background. In China, the aging problems is more and more serious, share the same characteristics with Japan and Taiwan. Recently, the government created a new policy, 2 children in 1 family, change the birth control. But I think it's difficult and not enough to change the aging tendency. we have to consider how to promote the insurance service to meet the elders' insurance demand. As for China insurance market, the global ranking of premium income in last year is fourth, but its density and penetration did not match the economic development and the consumer's demand. So we can say learn some of the experience from the Japan and Taiwan. By the way, I like to know more the relationship between the training education and their performance in Japan, in Taiwan's presentation, that I have known about something about it. Besides, we maybe pay attention to the online insurance in the continuing education courses. Maybe we can place it plus the courses. I like to introduce the development of online insurance in China. It's very amazing. The premium of online insurance is $13.6 billion last year, occupy more than 4% premium, total premium. In the first half of this year, the online insurance premium amounted to $12.9 billion US dollar. It's 2.6 times the same period last year, close to total online premium level of last year. Maybe it happened within China, maybe it's some of the special, but I think it's an interesting phenomenon. Maybe need more observation and research. There are many applications waiting for the government's license for setting up a pure online insurance companies in China. I think that's a very interesting phenomenon. But in China, the online insurance company is not only the sales channel, but also a platform of creating new insurance products. Besides, I'm interested in the Professor Sharon's presentation. I have a question to ask. How to define the confident or and not confident? How do you choose your consumers to develop your survey? That's the comment. Thank you.
Okay, thank you. Would you answer?
Yes, would you like me to answer? So the survey was fielded to a random sample of New York State consumers. So it's trying to match the demographics of the state as a whole. That's the state my university is in. And how we developed confident versus non-confident is we simply ask them a question: how confident are you about various things, about your insurance knowledge? And we used I think it was a 7-point scale. So the middle scales were somewhat unconfident, somewhat confident. We eliminated those responses, and we categorized people as not confident if they said not confident
we are now done with presentations and discussion. Well, are there any other questions?
Yeah, I would like to make a comment on the last paper by Sharon. When we make analysis like that, we have to keep all the conditions, the backward condition constant, ceteris paribus, as you say. At the same time that they change the regulation of agents, they change also the remuneration of agents on one hand, and on the second hand, the insurance companies are marketing quite a lot of their products through the internet, and they are competing with their agents. I think this is responsible for the major decline in the number of agents. The agents are suffering because they have more responsibility, they have more obligation to study and to do all kinds of things, and a lot of paperwork that they were not used to doing before. And the remuneration has declined, the competition has increased, so they are leaving the area. You look at the average age of agents in the Western countries, and you see that there are, you don't see many young agents anymore.
Okay, would you answer?
I can't speak for sort of all of the companies in Germany, but I know the company that we had the data for did not change the way they compensated the agents. It's certainly